Welcome everyone to the beginner's room with me today on XM Live. We are looking at technical trading today, and under technical trading, we're going to be talking about candlestick charts. We know that candlestick chart is the most common chart that people use in making trading decisions. So today we will look at candlestick charts and we would see how we can make valid trading decision using candlestick. I would also be helping you have a good understanding of the candlestick so that if you see the different candlesticks in your chart, you understand what they represent and how they move. However, before I have a plan to take a trade, which is this one, gold. At the moment, it's looking bullish for me. And why? I usually would do my analysis by doing a top-down analysis from the weekly down to the 1 hour. Okay, and then I make my decision. So usually for the weekly, I try to see what is the trend like, how did the week close last, and that helps me to have an idea of what the major direction. And that way, I would be able to come down, take it down little by little from daily through the 4 hour and then to the 1 hour time frame. And there I would make a decision. Sometimes I sit on the 4 hour, sometimes I go down to the 1 hour. Now, on the 1 hour, I was paying attention to this kind of bullish flag pattern that we have here. And I feel that, okay, if there's a close above, I will be doing a buy. Now, we had a close, we had a retest of the 50 moving average, and I will be looking to do a buy now. So I am buying from here. Where is my stop loss going to be? Say around here, I'm going to be placing my stop loss here, which is like 140 pips. And my take profits would be I'll go look at that from the daily, somewhere all the way up here. And I know that it's more than multiplied by 2 of my stop loss. So to calculate my lot size, which is the first thing I'll be calculating, in order for me to know how to take the trade properly, I'll do 140 pips that I want to take as the stop loss multiplied by 10, which is the pip value, and that gives me 1,400. Now I want to risk $110 on this. So 110 divided by 1,004 gives me 0.07. Okay, and that's what I'm going to be using as my lot size on this. Okay, 0.07, and I'm doing a buy. Also, it's a market execution because I want to buy it at the current market price. All right, so that's a trade I have taken there. My stop loss is somewhere around there. And then take profits, I'll go a bit higher to the 4 hour time frame to find my take profits. Okay, I take my profit either here or I make it higher. I expect that it goes even higher. So I'm placing my take profit somewhere here and my stop loss here. Usually I like to take a minimum of 2 rewards to 1 risk ratio. And if you look at what I have here, I took 150 pips stop loss and take profit is how many pips? 630. Okay, so that's still some good one. So I'm going to hold on to that and see if it plays out well. Now, if it's going to play out, it's also going to be fulfilling a pattern for me. And it's like an inverted head and shoulders, although we're still inside of a consolidation after it got to the support area here, and it's been ranging. However, we have what looks like head and shoulders pattern inverted. That's head and shoulders bottom. Now that pattern would usually indicate for me that the direction of the market is changing from a downtrend into an uptrend. So it's like having two different patterns that can give idea of what the trend is likely going to do. So if this continues to go up, it's going to fulfill this pattern, and that would help me expect that it continues to buy. And like what I had seen earlier, we have this here, um, like a flag pattern, a bullish flag pattern, which could also support this trade idea we have. Okay, so what I have done is taking a trade, and we're going to hold on to that as we continue to talk about chart patterns. Now, if you look into the chart I have opened, this is a candlestick chart. Okay, by the way, if you tune in with me and you have a question, do well to ask, and I'll be more than ready and willing to answer. Chandana, good to have you. So we have Chandana with us on XM chat room. Not yet profit. Now I am trading, not yet profit. Okay, which one are you trading, Chandana? All right, so this is a candlestick chart. I have these two lines you're seeing on the chart are the 50 and the 20 moving average exponential. I love to have them to my chart because they not only help me to have idea of what the direction of a market is, they also help me to find proper entry, okay, to make proper entry decision. And in that case, if I am going to do a buy, for instance, on the time frame I'm entering from, which in this case, 1 hour time frame, I want to see that the price is above my two moving averages at the moment, at the point I'm entering. Okay. If I am doing um this, if I am going to be doing a sell, I want my take profit, my entry to be somewhere below the moving averages. And one of the reasons is because the moving averages I have on the chart, they also serve as dynamic support and resistance sometimes. So I like to enter if it is a buy above them, so that if they are serving as support, then it fits in with what I am doing. Because if the price touches them, comes back to the support and bounces to the upside, it's better that way. However, if I'm doing a buy and it is still below the averages, and then they serve as dynamic resistance, what happens? The price gets to them and then it bounces and begins to go down again. And I am buying. So that's one of the reasons I would rather wait to see that buy opportunity. Um, above the averages and sell opportunity below the averages. Okay. So that's what I have for gold. Now we're going to go talk a little bit about the candlesticks, what they mean, especially for someone entirely new to the market. You would see the candles, you see red and green, like I have on my chart, and you're wondering, what are these lines? What do they represent? How does this help me make a decision? We'll talk about that. Now, it is not just the candlestick we use in the market. Sometimes some people like to use the line chart. So if you come up here, you can change from candlestick to line chart, and you see this green line here. That is the price chart at this moment. If I change to this one, this is the bar chart, and this is what the bar chart looks like. The bar chart also kind of asks a lot of the kind of information we have on the candlestick. It tells us the open price, the close price, and the range of that candle. However, I love to use the candlestick because it's kind of visual, and it gives a clear indication of what the price is doing at the moment. So I know as well that a lot of traders, new traders, especially in the market, use the candlesticks in their analysis. So I will be using this opportunity to give you a deeper understanding of what the candlesticks mean and how you can use them, different candlestick formations, to find trade ideas. You would see that I talked about some formations and patterns here, okay? And sometimes I look at the kind of candles that are forming in order to make good trading decisions. So let's look at candlestick chart. We would be talking about the OHLC of the candle. So I'll help you understand the open, high, low, and close. What do they mean when we talk about candlestick? What candlesticks really are? How to trade with candlestick formation, and then how you can find entry and exit with candlestick. Okay, Chandana is trading gold. Yes, I have. I just entered gold as well as we started this session. Um, what are that? We have a lot of questions. Simple way, good to have you here. Good morning. I lost your $39. Okay, Chantana says she lost $39. I'm trading by mobile, is it? Oh, also good morning. Ali Joseph. I think I'm right. Ali Joseph, right? Good morning from Nigeria. Happy to have you. I'm also joining you from Lagos, Nigeria this morning. Um, you're trading by mobile. That's okay. You can trade by mobile or computer, Chandana, whatever you choose to trade by. I love to trade by both. Sometimes I do most of the time though, I do my analysis from the computer. But if I have a trade ongoing and I can be in a place where I don't carry computer around with me, then it will be my phone that I watch it from. So whatever you decide to use is all good. Yes, when it comes to analysis, I think a broader screen like the computer or even something bigger would help you see the screen better. But for a start, your mobile is fine. Okay, so let's move on. So what are candlestick charts? The candlesticks provide range of information about currency price movement, helping to inform trading strategy. Okay, the candlesticks help inform trading strategies, setups, indications of where the price are likely going to be. They are easy to interpret because they are a good place for beginners to figure out chart analysis. So as a new trader in the market, you're analyzing most of the time. If you even open your MetaTrader 4, MetaTrader 5, you would see that the analysis that you're able to it comes as a default. Okay, candlestick comes as a default, and then you're able to do the analysis. You're able to start learning analysis more easily with candlestick chart. Okay, they are easy to use because the eyes easily adapt to candlestick chart. Um, Making it easier for you as a new trader to understand whether the trend is to the upside or to the downside. You can easily visualize the bullish and the bearish sentiments by the bodies, the colorful bodies that are displayed in candlesticks. You have the red candles, you have the green candles. The red candles signifying bearish trend, while the bull candles or the green candles signifies bullish trend. Okay. Now we have the candle creating the open, the low, the close, and even the wick. Okay, we have the wick. These are called shadows. We have the upper and the lower shadows on this chart, and we also have the body of the candle. Now we can differentiate between the close, the open, and the wicks, and we can also tell where the high of the day has been or the high of the candlestick period and the low as well. The candle is going to turn green in the case of my own color orientation. People use different chart. I love to use green and red. Okay. So it's going to turn green for me if the price closes above the open. So you would see that in this case, this is the open price, this is the close price. So if the price is opening low and closing higher, then the color of the candle is going to turn green, signifying bullishness, okay? And showing that there is higher demand in the market than supply. And then we also have the color of the candle turning red, if the price closes lower than the open. So the price at the candlestick at open at a price that is high, and then it is closing at a lower price. And in that case, we have the color of the candle in red. Okay. If you have the chart on a daily setting, each candle represents one day. If you have it on 5 minute setting, it represents 5 minutes. Every candle that is formed on 5 minute time frame is formed within 5 minutes. The one that are formed on your 4 hour time frame is formed within 4 hours. So this is what I mean. This is 1 hour time frame that we opened earlier. What this means is every candle on this 1 hour time frame is formed within 1 hour. This current candle that opened had formed as at 15 minutes ago, and in the next 45 minutes, it's going to close. Okay. Now, with If we are on the daily time frame, for instance, every candle represents one day, and the open price is the first price traded at the beginning of the day, and the close price is the last price traded at the close of day. Okay, if it is 1 hour time frame you're in, the open price is going to be the first price that the instrument is traded within that hour, and the close price is the last price that is traded within that hour.